Social entrepreneurship is a big deal here at INSEAD, and one of the MBA students who has made a big promise on social entrepreneurship is Samir Hajee, who has started his own energy company, Nuru Energy, and has now managed to get some scale-up funding. We've been following Samir now for about a year, and thank you for coming back.
Yeah, thank you for having me.
We're happy that you've allowed us to follow you through the process of all of this.
My pleasure.
Nuru Energy is you're based in East Africa, bringing energy in little cubes to schoolrooms, operating theaters, and the business has finally gotten some scale-up funding from Bank of America Merrill Lynch.
Yeah. So end of February, we signed an agreement with Bank of America Merrill Lynch, essentially to provide us the scale-up capital for our Eastern African business. To scale up in 5 countries in Eastern Africa, Rwanda, Kenya, Burundi, Tanzania, and Uganda. We've got 3 revenue streams, the product margin, which is the short-term revenue stream, the mid-term revenue stream being the micro-franchise fees that we charge our entrepreneurs, and then the long-term revenue stream for us is carbon credits. And essentially, we have an agreement with them where they would buy a certain number of carbon credits from us as we continue to grow in Eastern Africa over the next 10 years.
What do they get out of this?
So, well, they're buying the credits from us at a slightly below the market price, and they can then resell those credits on a market.
Now, your model was actually to build entrepreneurship in Africa, where this takes place. An entrepreneur buys from you, or used to buy from you, a generator and some of the little light cubes.
Yeah.
Is that what's still happening now?
Yeah, by and large, what we've done though is the initial size of the loan included the power cycle pedal generator and 50 lights. And what we've realized as we started to expand is that we can approach a far greater number of entrepreneurs if we actually remove the power cycle generator from the loan package. So now it's just the lights.
So it's cheaper, they don't have to buy the generator.
Absolutely. So the loan size is much smaller, it's more appetizing, it's more bite size for a potential entrepreneur. And so the level of risk that they perceive is actually much less.
But somebody has to have the generator, so who has the generator?
So we still provide them the generator, but we're planning on recovering the cost of the generator via corporate sponsorships or co-branding deals with FMCG companies or telecom operators, and we have a couple of those deals currently in the works.
So you found somebody else to actually take on the cost of the generator, or potentially do that,
Absolutely.
So that it's not borne on the ground by the entrepreneur.
Absolutely. So they're basically spawning entrepreneurship in one way. And at the same time, creating there's an opportunity for these MNCs to market their brand or logo in rural areas.
It's probably too early to ask which multinational company is.
A little bit too early, yeah.
Okay, yeah. But you are in talks with some of these people.
Yeah.
Would they get their logos on the generator, or what's
either their logos, or if the interest is strong enough, we could certainly change the color of the generator. It could be red, green, whatever the color might be appropriate.
Let's do a really quick recap of how this came to this point. Clearly there was a need for energy in Africa because kerosene was the basis of that, and that's neither very good environmentally, and it's probably not sold by very savory people, and it's not very efficient. How did you happen to recognize the need for light?
Just by spending enough time in these markets, you quickly realize that 90-95% of what they call base of pyramid populations use kerosene as the main source of lighting. And if you look at some of the negative aspects of kerosene, it's economically unfriendly. So it costs a rural household up to 25% of their monthly income. Environmentally unfriendly, it's unhealthy, it's unsafe. And our consumers, our end consumers that are buying our light. Our lights recognize that, and for us, for them, it's an easy kind of switch, because they're going from an energy source that is expensive and polluting to one that is inexpensive and clean.
And these are simply little cubes that have how much wattage?
So each unit has enough capacity to provide 10 days worth of light, and we've talked about this before. Each unit is a task light, and we spent a month living in a village in Rwanda in 2008, just observing this market to understand why do 90 to 95% of these consumers buy kerosene, even though there are all these negative aspects to it. And it really came down to a few key features. One is that kerosene was portable. They like the fact that they can go and buy it and bring it back to their home. The fact that it's reliable, you don't have to wait for the sun or the wind. You light it and it lights. The fact that it can be purchased in increments. And the observation that we made in 2008, and we still make, is that the majority of lighting is for task-based activities. So our little light cube essentially is the form factor that it's in because of that. It provides not enough light to light up a room, but certainly enough light to get the job done.
And you can put several together so you could light up a room.
Absolutely,
actually.
yeah. So that's where the incremental purchasing aspect comes in. And as mentioned this before, that FMCG companies have been doing this in rural markets successfully for a number of years, where they took, let's say, the packaging of a shampoo bottle or large like a soap, for example, and they've made it into bite-sized chunks. And we've done exactly the same thing in the lighting space.
So now that you've gotten this backing from Bank of America, Merrill Lynch, are you beginning to look at the project differently? Are you beginning to see other opportunities? Are you feeling relieved that your hard work has paid off?
Well, now's when the work begins, actually, which is really interesting. To date, for the last 3 years, we've been working on refining the product, refining the business model, and then for the better part of the last year, raising this funding. So now is when we actually get to roll up our sleeves and take what we've done and take it to the next level, and we're really excited about that.
So when you leave here, in front of our camera, what are you going to do?
We just met in Kigali. I just got back from Kigali last week. We had a senior management meeting for the last week and a half where we discussed our operating model for Eastern Africa. Now that we've got funding, how are we going to use it? Even though we've thought about that before, now that we've got money, it's completely, we've had to really think in detail about where and how we're going to be scaling up in Eastern Africa. So we've just gone through that exercise, and now it's a matter of executing the plan that we put in place last week.
And what worries you?
What worries me is logistics, by and large. We manufacture our product in China with a very deep, long-standing relationship that we have with a Chinese factory. But once the product is produced and we have to actually get it into the hands of our entrepreneurs and our end customers in Africa, there's a long process there, and a lot of things could potentially go wrong. And we've seen it before in previous businesses that we've been in, where containers get held up at shipping ports, and our business is technology dependent. We depend on the success of the business is based on the fact that we can get our technology into our entrepreneurs' hands. So, logistics is definitely a concern.
But you must be optimistic as well. What are your hopes for all of this? Give me a 5-year picture.
Well, we're looking at tens of thousands of entrepreneurs in Eastern Africa, with potentially hundreds of thousands, if not more, light cubes sold, and we certainly are expecting to be profitable in the next 3 years, so well before the 5-year mark.
And so then, what's your next growth step? You have this sort of kind of a scale-up funding. What's your next financial step?
The next step for me is to continue to fundraise, continue to go on road shows for our Indian business, because we've already established ourselves in India. We've had to, as I've mentioned before, I believe, tweak the model, tweak the product slightly for the Indian market, and we finally have, again, a model that works in India that we are looking to scale up, and we're continuing to look for funding for the Indian business. At the same time, we're also talking to potential partners in other countries outside of Eastern Africa, but within Africa, that want to take the product and the business model and build it out, let's say, in Ghana or Nigeria or other markets.
What did the students with whom you spoke today ask you? Were they enthusiastic? Did they have any questions stick with you?
Yeah, I think the one question that I get a lot, and I got a lot today, was, how did you come up with the idea? It would be great if I could come up with a formula for how you create ideas, but in my case, it was kind of a perfect storm. The idea was created based on the fact that I was living in Africa. I saw that there was a need there. I had a background in engineering, then went on to work for a company that was specifically looking at this space and had products that were not they were trying to sell into this market, but were not appropriate. So there were other ideas that industrial designers at that same company came up with. So it was really kind of a perfect storm of a lot of different elements, and that was my answer. Yeah.
And then the hard work to make it all happen.
Absolutely. Yeah.
Samir, thank you very much for being with us on INSEAD Knowledge.
Thank you, Shelley, once again.